Picture this. You're a middle-class family in Shanghai. You've saved for 15 years, scraped together every yuan you could find, and finally bought your dream apartment in a gleaming new tower. The developer promised completion in 2 years. That was 4 years ago. The construction site sits abandoned, a skeletal concrete frame that haunts your sleepless nights. Your life savings are trapped in an unfinished shell, and the bank still demands your mortgage payments every single month. This isn't a horror story. This is the daily reality for millions of Chinese families right now, and it's about to get much worse. Before we dive deep into this crisis that's reshaping the world's second-largest economy, smash that like button and subscribe to stay informed about the stories that actually matter. The mainstream media has moved on from China's property collapse, but I haven't, because this disaster is far from over. Let's talk about what just happened. The Chinese government recently eliminated something called the 3 red lines policy. Now, if you've been following this channel, you know exactly what those red lines were. But for everyone else, here's the quick version. Back in 2020, Chinese regulators introduced 3 debt restrictions on property developers.
China's real estate industry is collapsing
financial
in slow
handcuffs
motion. These
designed
ghost
to
cities,
prevent
or residential
developers from
buildings without
borrowing
tenants or
themselves
construction that
into
never finish,
oblivion.
have become visual metaphors for
Developers
the
had to
ongoing
maintain a
crisis.
liability to
got
asset
essentially
ratio
a
below
confidence crisis among
70%,
consumers who
a
weren't
net
able to
gearing
trust
ratio below
developers to deliver the
100%,
apartment they had
and a
paid
cash
for,
to
at least in
short-term
part,
debt ratio
and,
above
China's
1.
financial
Break
world,
these
there
rules,
hasn't been
and you
as
couldn't
many
borrow more
regulatory
money.
constraints as
Simple,
you might
right?
that are more
Wrong.
developed.
The total value
Catastrophically wrong. These restrictions were supposed to deflate China's property bubble gradually, like slowly letting air out of an overinflated balloon. Instead, they popped it, spectacularly. Developers who'd spent decades operating on borrowed money suddenly couldn't access new loans. Projects ground to halt. The defaults began. Evergrande, once the world's most valuable real estate company, collapsed under more than $300 billion in debt. Country Garden, which had survived longer than most, finally buckled under the pressure. Shermao, Sunac, Kaisa, China Fortune Land Development. The list of fallen giants reads like a corporate obituary column. So naturally, you'd think eliminating these restrictions would be good news, right? The government's finally loosening the chains, letting developers breathe again. Markets should celebrate. Investors should cheer. The crisis should ease. Except none of that is happening. Here's what the so-called experts celebrating this policy change don't understand. You can't resurrect a corpse by removing the handcuffs. The damage is done. The developers who needed those borrowing restrictions lifted are already dead or dying. The ones still standing don't want to borrow more money because they've learned the hard way what happens when you overextend in collapsing market. Let me put this in perspective. China's property market isn't just big. It's absolutely enormous. At its peak, real estate and related industries accounted for roughly 30% of China's entire economy. 30%. Imagine if nearly a third of all economic activity in your country suddenly collapsed. That's what we're watching unfold in real time. And here's the truly terrifying part. The Chinese government knows this. They're not stupid. They eliminated the 3 red lines because those restrictions became irrelevant. It's like removing a no running sign from a cemetery. Nobody's running anymore anyway. Let's dig into the actual data, because numbers don't lie, even when governments do. Despite the elimination of these borrowing restrictions, property investment in China continues to free fall. New construction starts are down by double digits compared to last year. Home sales across major cities remain deeply depressed. Prices in Tier 2 and Tier 3 cities, those smaller urban centers that lack the prestige and economic dynamism of Beijing or Shanghai, are plummeting. But here's where it gets really interesting. The Chinese government has thrown everything at this crisis. Everything. They've cut interest rates multiple times. They've reduced down payment requirements for home buyers. They've allowed local governments to buy up unsold inventory. They've promised to finish all those abandoned pre-sold apartments. They've injected hundreds of billions of yuan into the banking system. They've told state-owned enterprises to step in and acquire distressed projects. They've essentially weaponized every tool in their considerable economic arsenal. And yet, the market refuses to stabilize. Why? Because this isn't just an economic crisis. It's a crisis of confidence, and confidence can't be rebuilt with policy announcements and cheap loans. Chinese households watch their neighbors lose their life savings. They've seen developers default on promises. They've witnessed the government's initial crackdown on speculation morph into a desperate scramble to prevent total collapse. They've learned that the social contract, that unspoken promise that housing prices would always rise, that property was the safest investment, that the government would never let the market truly fail, was built on sand. Now I want you to understand something crucial about Chinese culture and economics. For the average Chinese family, a home isn't just shelter. It's your retirement plan. It's your family's financial security. It's your children's marriage prospects, because in many parts of China, you literally cannot get married without owning property. It's your status symbol. It's your proof that you've made it in a brutally competitive society. Losing that home or having your investment collapse isn't just financial ruin. It's social catastrophe. So when the government says, "Don't worry, we've fixed the problem, start buying again," people aren't buying it. Literally. Let's talk about the developers themselves, the ones still breathing. Companies like China Vanke, which recently made headlines for its own struggles, are desperately trying to stay afloat. They're selling assets. They're negotiating with creditors. They're slashing prices to move inventory. But here's the problem. When you slash prices in a falling market, you don't just attract buyers. You confirm everyone's worst fears that prices will keep falling. It's a doom loop. Lower prices mean lower revenues. Lower revenues mean less ability to finish projects. Unfinished projects mean more angry homebuyers. More angry homebuyers mean more pressure on the government. More pressure on the government means more desperate policy measures. More desperate policy measures mean more evidence that the crisis is worse than anyone's admitting. And through all of this, the banks are sitting on a ticking time bomb of bad loans. Official non-performing loan figures in China are notoriously unreliable, but even optimistic estimates suggest hundreds of billions of dollars in property-related debt that will never be repaid. Some analysts believe the real figure could be in the trillions when you include loans to local government financing vehicles that borrowed heavily against land sales revenue that's now evaporated. Here's something that should terrify you. Local governments in China have traditionally relied on land sales to developers for roughly 40% of their revenue. 40%. When property development collapses, local government finances collapse with it. And these local governments are responsible for everything from schools to hospitals to infrastructure to public services. The ripple effects are already visible. Some local governments have delayed salary payments to public employees. Others have cut back on public services. Infrastructure projects are being postponed or canceled. The social safety net is fraying just when people need it most. Now let's zoom out and look at the bigger picture, because this crisis doesn't exist in a vacuum. China's economy is facing multiple challenges simultaneously. The population is aging rapidly. The workforce is shrinking. Productivity growth is slowing. Trade tensions with the United States and Europe continue. Foreign investment is declining as companies diversify supply chains away from China. Consumer confidence is at multi-year lows. Youth unemployment is so bad the government stopped publishing the statistics for months. The property crisis isn't happening to a healthy economy that can absorb the shock. It's happening to an economy that's already struggling with fundamental structural problems. And here's what really keeps me up at night. We still don't know how bad this gets. The Chinese government has been remarkably successful at preventing a disorderly collapse. They've managed to avoid a Lehman Brothers moment, that sudden catastrophic failure that triggers a broader financial crisis. But managing a slow-motion disaster is different from solving it. Think about Japan's property bubble collapse in the early 1990s. That crash led to 3 decades of economic stagnation, deflation, and anemic growth. Japan still hasn't fully recovered. And Japan was a rich, developed country when its bubble burst. China is still a middle-income country trying to reach developed status. The risk of falling into what economists call the middle-income trap, where a country gets stuck at moderate income levels and can't make the leap to high-income status, is very real. Some analysts argue that China is different. The government controls the banks. The government controls the big developers. The government can prevent panic. The government can force solutions. And to some extent, that's true. China's authoritarian system gives it tools that democratic governments don't have. But here's the thing about economic gravity. It doesn't care about your political system. You can delay it, you can manage it, you can try to cushion the fall, but you can't eliminate it. And the longer you delay necessary adjustments, the more painful those adjustments eventually become. The elimination of the 3 red lines policy is a perfect example. The government implemented restrictions that were too harsh, too sudden, on an industry that was too leveraged. The restrictions triggered a crisis. Now they're removing those restrictions, but it's too late. The developers are already broken. The homebuyers are already scared. The momentum is already negative. It's like trying to restart a car after you've driven it off a cliff. Fixing the engine doesn't address the fundamental problem. So where does this leave us? What happens next? In the short term, expect more of the same. More stimulus measures that produce diminishing returns. More developers restructuring or failing. More unfinished apartments. More angry homebuyers demanding their money back or demanding completion of their units. More pressure on local government finances. More stress on the banking system. In the medium term, China faces a fundamental choice. They can accept lower growth, allow the market to clear, let prices fall to levels where genuine demand exists, take the pain now, and build a more sustainable economy. Or they can continue trying to prop up the property market, avoid the necessary adjustments, and risk an even bigger crisis down the road. Based on everything we've seen, the Chinese government seems committed to the second option. They're trying to engineer a soft landing in a market that's already crashed. They're trying to restore confidence in a system that's lost credibility. They're trying to convince people to buy overpriced apartments in a falling market. Good luck with that. Here's my prediction. This crisis is going to drag on for years. Not months. Years. We're going to see more defaults, more restructurings, more bailouts disguised as market-based solutions, more policy announcements that fail to move the needle. More articles declaring that China has turned the corner, followed by more data showing they haven't. And the human cost is going to be staggering. Millions of families will see their wealth evaporate. Young people will delay marriage and children because they can't afford housing. Small businesses will fail because consumer spending collapses. Workers will lose jobs as the construction industry shrinks. Social tensions will rise as inequality widens and opportunities narrow. But here's what the Chinese government fears most, not the economic damage, not the financial losses. They fear the political consequences. They fear millions of angry middle-class families who played by the rules, worked hard, saved diligently, and got screwed anyway. They fear the erosion of the social contract that's kept the Communist Party in power for decades. They fear that people will start asking uncomfortable questions about a system that privatized profits for developers and connected officials while socializing losses for ordinary families. That's why they're so desperate to stabilize the market. That's why they'll keep throwing money at the problem. That's why they eliminated the 3 red lines, even though it won't help. Because the alternative, admitting that the property dream is over, that housing wealth is gone, that the old model is broken beyond repair, is politically unacceptable. So they'll keep pretending, keep announcing new measures, keep claiming that stabilization is just around the corner, keep blaming external factors and malicious short sellers and Western media for talking down the market. And meanwhile, millions of Chinese families will keep paying mortgages on apartments that don't exist. Keep watching their neighborhoods fill with empty towers. Keep wondering if they'll ever see their money again. This is the brutal reality of China's property market in 2025. The 3 red lines are gone, but the crisis remains. The policy has changed, but the fundamentals haven't. The government is trying to declare victory, but the market isn't cooperating. It's not over, not even close. And anyone telling you otherwise is either lying or clueless. If you want to stay informed about how this crisis unfolds, make sure you're subscribed to this channel. Hit that notification bell. Share this video with anyone who needs to understand what's really happening in the world's second largest economy. Because this story matters. It matters for China. It matters for the global economy. And it matters for millions of families whose lives are being destroyed by a crisis that politicians and developers created and now can't fix. The property bubble has burst. The question now is how long the fall will last and who will be left standing when it finally ends.